Let's bring in James Gerrish now, who joins us live from Shaw and Partners to take us through these numbers. James, great to have you with us, and I know these numbers are just dropping as you're coming live on air with us as well. Just hearing some of those, though, and with particular respect, I suppose, to their outlook, they've maintained their guidance, 330 to 340 million tonnes there. On first take, what do you make of some of those numbers?
Yeah, good morning to you, Leanne. Two really important things in Rio's production numbers is around iron ore and copper. I'll start on iron ore. So the market was, the prior guidance was for around 330 million tonnes per annum. So the guidance of 330 to 340 is actually probably more positive than the market was positioned for. From what I can see, the market was expecting somewhere around that 325, 326 million tonnes. So I think they've done slightly better in terms of their overall production guidance for the year. Of course, Rio's a December year end, so these numbers are pretty important to give a good understanding of the full year for Rio. So look, I think those numbers are good in terms of that production level. 87, I think you made mention of for the quarter. We're looking around 89, so it's neither here nor there. It's that guidance of 330 to 340 which is key.
Yeah, okay, and we had a look at the share price yesterday. I note that, well, actually both BHP and Rio managed fresh multi-year highs yesterday, but Rio Tinto was up about 1.5%. And yes, we know that the commodities backdrop has largely been positive. It's been supportive of the miners. Just given the result there today and where we're sitting at currently with Rio's price, how do you think it might get out of the gates today?
Yeah, I think that'll be taken as a positive on today's trade. The other factor you made mention of there is around copper. Escondida is really starting to kick goals. Grades are increasing there, which is obviously flowing through to better production numbers there. We were going for about 140 and they came in at 148, so that's obviously going to be a positive. Just to give you some backdrop around pricing and what the stock price has done in recent times. In the back half of, or the last month or so in 2015, early 2016, Rio was sub $40. It corresponded with the iron ore price being sub $40. If we look to where those prices are trading at now, Rio is just shy of 82, and iron ore is trading around that 76, 77 a tonne mark. So clearly it's an iron ore play. Clearly it tracks the underlying iron ore price. Consensus expectations for iron ore are lower than the market price at the moment. They're sitting around 55 to 60 US a tonne. The market now is 76. So the analysts have come upgrade on this sector, but clearly the price of Rio has already factored that in, and it's obviously had an exceptional run up in recent times, Leanne.
How do you view Rio at these levels? Would you be a buyer? I mean, he's still participating at these levels. Are you a holder? Are you a seller? I mean, how do you view it?
Yeah, we've still got to buy in the stock. We've got a 75 price target, so it's ticked through our price target. That said, we're in our model we're plugging in $55 for iron ore. It's trading above $76 at the moment. So there's clear room for upgrades there. Our price target will go up. The buy will probably be maintained when that happens. But as I said, it really comes down to the iron ore price. You can really clearly see that Rio is an iron ore story. To give you an idea, a dollar increase in the iron ore price is worth about $250 million to Rio after tax on a per annum basis. So clearly massive leverage to the iron ore price. What the iron ore price will dictate what Rio does moving forward. I know it all looks rosy right now, but again, it is going to be dictated what the iron ore price. Escondida in terms of copper is going to become increasingly important, not so much in terms of Rio, more for BHP in 2018, but it is a story that the market will be watching, Leanne.
Well, just with respect to the price of copper and iron ore, copper seems to have had a small correction recently, but seems to have resumed its uptrend overnight, up another 1.5% or so. Look, we know that largely it's been a US dollar story that's playing into a lot of commodities right now, and it's providing that support. Outside of that, though, do you think there is potential for further upside, certainly if we continue to get positive economic data, strong manufacturing data, this global growth picture, as you point out? Do you think there's further upside, perhaps, for some of those key commodities?
Yeah, I think there is. If there's continued coordinated global growth on numbers that support that theme, then yes, certainly commodity prices continue to rise. The US dollar, has come back on the dollar index. We're trading just above 90, the 90 handle. That to me is a reasonable level of support for the US dollar. So I think that's the big issue. I don't think commodity prices will continue in the trajectory they have. Of course, if global growth numbers continue to print really strongly, and that filters in through to better economic growth in America and inflation, etc., they'll be forced to raise rates probably quicker than the market perhaps is positioned for. That'll put upward pressure on the US dollar, which is obviously a negative for commodities. So that's sort of the playbook that I'm working towards this year in the early part of 2018. I think the US dollar is probably nearer a low than it has been in recent times. So that's the big variable to me. So they've had a good run, commodities, and as I've said in numerous times in the past, I'd rather be buying weakness and selling strength in the commodity markets, and clearly at the moment we're seeing strength prevail.
Yeah, and it is interesting, the US dollar doesn't seem to be sort of justified by fundamentals when you consider rising rates. That should be favourable for a strong dollar. So interesting moves, I suppose, with that respect. Look, overnight, and yes, the weaker US dollar seems to have played into the commodities move in the overnight session, largely supported, you'd have to say, a stronger backdrop leading into our session today. What do you think we can expect when we obviously consider no lead from Wall Street, weaker lead from Europe? How do you think it's all likely to play out today?
Yeah, it's going to be. SPI futures are down a touch, but I think that news coming out of Rio is obviously going to be taken as a positive. BHP is looking to open up sort of 1.5% or so when trade kicks off this morning. So that positive undertone in the commodity markets is likely to continue. Stock-specific news, you made mention of Bellamy's upgrade, so they've upgraded EBITDA margins and revenue quite meaningfully. The stock was up 5% yesterday ahead of this news, so some interesting trade ahead of this release this morning, but that'll be in focus today. So I think it's a case where stock-specific news will drive the market. Banks, given what the SPI is doing, will probably be a little bit soggy again, Leanne. So look to the resources for most strength.
All right, fantastic. Look, James, we do appreciate you joining us, taking us through all of those production numbers just as they were dropping. Thank you so much for your time this morning.
Thanks, Leanne.